The other day I put out a video on trading indicators, which you guys really enjoyed, and in typical YouTube video fashion, there was a lot of discussion behind the scenes answering the questions that you guys had. And a common discussion topic was the idea that you need to understand that there's no perfect indicator, there's no perfect filter, meaning that there's nothing you can add to your strategy that's going to make it work every single time and eliminate all of the losses. Everything that you add is a give and a take. So when you add a specific filter to your strategy, let's say something that helps you have a higher win percentage, it's going to eliminate a lot of those bad trades, but some good trades, right, valid trading opportunities are going to get caught up in that as well. And you just have to kind of roll with the punches. And that's what I wanted to share with you guys today. You see, this week in my live trading room, we had two examples of two completely different types of trades that used the same exact indicator filter for entry. And in one of those opportunities, it gave us a massive benefit, meaning we're able to profit a lot more because of that filter. But on the other trade, it actually caused us to miss the opportunity because, well, we couldn't get what we needed without kind of spoiling it. So I want to walk you through those situations today. We'll start with the good. We'll end with the, I don't want to call it the bad, but the trading opportunity that we couldn't get involved with. And at the very end, I'm going to share with you the most important psychological lesson that you need to take from this type of situation. This was our high and tight flag, or at least our sideways channel of consolidation. If you guys remember, we had our highs right there. We had our lows right there. As I always mention, these are very easy setups for me to trade because I simply have to draw a line and I say, if we violate the high, look to get higher. If we violate the low, look to get lower. In this situation, I wasn't really interested in any moves to the downside because there just isn't a lot of room. Our next level of structure is literally right underneath us here. So I can tell you right away, there's not any profit to be made. However, if we go higher, there is some room to the upside. Now, there's lots of bumps and wiggles in here, but our clearest structure shelf is going to be right here at about 160.61s. And if we were to bring in some volume profile to maybe get a better idea of where the market cares about, we're going to see that, well, I'll wait and show you. Boop. We're going to see that we actually have a little bit more of room, words, right, to the upside. Our point of change, meaning our highest volume spike, is going to be right here in this black line that is very similar to my crosshairs line. And you can see that the volume really doesn't start to spike up until we get to that nice even handled number of 161. So certainly a little bit more room than expected to go to the upside, right? So now we need to start asking ourselves the question, all right, if price action is going to go up, or if price action violates the channel, then we predict that price is likely to go higher. If price is likely to go higher, we've already predicted where we think price is likely to go higher to. Now, the next question that you, trader, needs to answer is, what is my technique, or how can I get involved? How can I get involved? Mo says, could you have also targeted the structure level just at the peak volume around 162.50s? Yeah, so let's go back to that real quick. Certainly. Yep. So again, this is, and your notice the common theme is, everything in trading is specific to said trader, right? So we took a look at this and I gave you a target level of 161 even, and I'll re-go over why I chose that number, 161 even, right? So what I did was I took the volume profile and I said, hey, I like this level. I started here. I said, I like this level of structure. This is a big old stinking block of structure between here and here. How do I know which is important, which is not? Because this is like a big old range of like 150 pips. So let's narrow that down by bringing in our volume profile and see what the market likes. So I saw that the point of change, which is the peak of the volume, this is at 161.32. So can you shoot for 161.32 as your profit? You certainly can. You can even shoot even higher at the top of the channel. Yep, it all depends on where you lie on that aggressive to conservative scale, right? If you are super aggressive, right, in your predictions, we'll make this side aggressive and make the other side conservative, right? If you're super aggressive in your predictions, yeah, you can shoot here in the middle of the channel or shoot all the way to the top of the channel and say, hey, I think price action is going to travel across all the way to the top. And this also has to do with a bigger thing on your philosophy with price, and do you expect it to test the beginning of zones or end of zones and stuff like that. If you're conservative, you're probably saying, hey, I'm going to get out like right at the beginning of the danger, which is either right here at 160.59s, or maybe right at the low of this channel right here at about 160.80s. And of course, there's everything in between. So yeah, you can certainly shoot for the point of change or the peak of something, whatever you want to call it, with a C. As long, here's the thing, as long as that's where you predict price to go to. So as long as that is your prediction, then yes. And like I said, every trader is different. And what I mean by that is this, when it comes to like the aggressiveness versus conservativeness, right? So let's say we have a level of structure, a past level of structure like this, right? And we got a nice trade down here and we're looking to buy it. There are typically two types of traders, and I'd love to hear which one you are. Maybe I'll put up another poll question for this. There is a trader that predicts that if price goes up, the first sign of danger is that it will stop at the beginning of structure. And then there is the trader that says, I expect price to travel across to the extremes of structure. Now, I want you to picture this real quick, because I'm going to put up a poll question for you, but I'm just curious. And there's no right or wrong answer. And of course, there's the trader in the middle as well that maybe does other predictions and finds something in the middle. We're just going to leave that out because that's going to be fluid on a trade-by-trade situation. But out of these two, when you see price approaching structure, what do you expect? Do you expect price to run into trouble at the beginning of the level or the end of the level? And poll question coming up soon. But yeah, to answer the question, Mo, yeah, you certainly could look at the point of change. Certainly. The main question is, the main thing is, you can look at it as long as you actually believe in that prediction. So like if you're just doing it and you're like, I don't think price is going to go there, but I'm going to put targets there, then that's always a bad thing no matter what it is. Even if it's targets too early. Yeah, that was my coach voice, yeah. So I gave a simplified version. What you want to do is, in general, you want to do your analysis to find that level. So again, what I did was this, right? We can do all types of things. There's not a lot of places we can draw stuff from, but again, initially we had the big zone. I think it was even bigger than this, sorry. And then we brought in the volume, which condensed the zone a little bit, right? It took that zone and made it, right? So that's zone number one. We brought in the volume, and that condensed my potential target zone to here, right? You can bring other things on as well. You can bring, we don't really have a great place to draw Fibonacci's from, but we can draw a Fibonacci retracement, or extension, from this swing low to this swing high right here. Maybe there's a 1618 hiding in there, right? You get a 127 a little bit lower. There's a 1618 right above that level. A Fibonacci retracement isn't really going to give us much from this swing. What I did personally was I took the even handle number. So I saw it in this zone. I said, well, what do we have here? We got a psychological number, right? I know where my psychological numbers are at. I got 60, 50 right there is 1. I've got the real one. The bigger ones are the 0, 0. So 61 is going to be the more important one. 61 right there. I got 61.50 a little bit higher. Again, that's not as important as the other ones. I got 62 right here. So what I did, I defaulted. I said, hey, you know what? The bottom of my volume zone is right here at about 161.02, right? Why not just default a little bit lower to 161? So yeah, at the end of the day, what you do is after you identify the zone, right? You have your big zone, then you use your skill and tools of technical analysis to narrow down that zone. And it's going to be different for different people. Some people use fibs, you might use volume, you may use even handle numbers, you may use AB equals CD patterns, right? You may connect the dot and be like, hey, what's an equal measured move? What would that give us? There's all types of ways to do it, right? So, but you use your technical tools to isolate that zone and find your specific price point. But that would have been too hard to add to the poll question because that's so open. It's so open. Hats off real quick, guys. On our Euro Canada, you guys remember this from yesterday? And here's the part you want to take pride in, right? Whether you traded this or not. Who remembers our target projection? It's kind of on your screen right now. But who remembers our target projection? These are the small wins that you got to find as traders to kind of boost your confidence. Right at that 161. Look what price did. This is called respecting the level, right? This is what you should gain confidence on. You called a level, price came right to that level and found trouble. That means you were right. You chose the place of danger, which is also the place you want to get out of the market at. Now, eventually it broke through and this could continue higher. That's fine. But it's obvious that the market respected this level. And that's what we're looking for when we're doing target projections and even stop loss projections as well. We are looking to build our skill of technical analysis and we want to become good at understanding what levels the market cares about, because that will help us again with where we put stops. It'll help us with where we put targets. It'll help us with where we decide to enter trades. So whenever you can make predictions, and I always advise doing the prediction game, just like go on a random chart. Maybe it's not even a trading opportunity. Just be like, hey, if price goes up, I think price is going to go here, and then mark it up on your chart and see how close you get. But if you can develop that skill, and I've always said the best skill that you can have as a trader, aside from like the psychological discipline and all that stuff, is going to be your ability to make predictions. Everything else can be filled in. There are millions of ways to find out how to enter a trade, right? But if you can't make a prediction, that entry is pointless. What's the point of like the greatest entry if you suck at predicting which way the market's going to go or where the market's going to go to? So hats off to you traders there. I saw that this morning. I'm like, man, right on the nose. Woo! And then it kept going back up. So good analysis, guys. Ali says, before we get into the Swiss stuff, also interesting that price didn't care at all about, price didn't care at all about that outside structure we talk about. Yeah, told you. I don't give myself a lot of credit for trading because that's just not my personality, and I also believe in the jinx. But the one thing that I will give myself credit for is I think I've become really good at making predictions. I think I've become really good at predicting where price is going to go, or at least the danger zones. But yeah, ignored the heck out of it. And that's the main difference, Ali. 2 years ago, this would have been the level I would have been like, hey, got to take profits out here. But the introduction of that volume just gives that little bit of a filter to say, hey, maybe instead of just looking for a move of 50 pips, you can look for a move of 90 pips, and that's almost double your profit just by that small little change. So it's again small changes over time create big differences. We had the inverted head and shoulders, which was a bullish sign. We had, I think it was Marcel's bearish butterfly pattern. And we spoke about how the two could be used together, right? And we spoke about how the butterfly pattern, we look for a period of relief. That period of relief could be the pullback, which we use to enter the inverted head and shoulders. And then we can look to trade it up. And so far, that prediction is going, well, a little bit better this morning, but going pretty well. We had our butterfly. If you front run, you hit target ones on that butterfly. If you don't front run, you're hoping it hits a little bit lower. And we actually had a nice conservative entry reason for that head and shoulders test, right? This is actually something I wanted to get involved in, but I couldn't just due to my style of trading. But we had our butterfly complete up here. We had our pullback. And then if I were looking for an entry reason down here, what do you think that entry reason would have been for a pullback trade? Higher high, higher close, 3-bar reversal, right? Look at this green candle right here. Higher high, higher close than the previous candle right there. Yes, higher high, higher close. Good entry technique right there if you were looking to get long. Now, here is going to be the difference between, and I call it the difference between trend traders or trend continuation traders, right? I am not a trend trader, so my first targets have to be at a previous level of structure, where a continuation trader is looking for the extension higher, right? So let's just go back to the higher time frame real quick and remind ourselves of where we are looking for that extension to come to. We have our previous level of structure right here, looking left. I think it was 24, right here. And then we isolated that level a little bit and said about right there, about 161.30. Let's make this a different color since I changed all my colors around, right? So the extension that we're looking for has room to go a little bit higher. So going back to our higher high, higher close, right? Even if you were to go down to the little bit more of a conservative level to 161 even handle, right? Which I believe has some Fibonacci confluence. Let's bring this out from swing low to swing high and back down. See a 127 right above that level. If you are entering on this higher high, higher close, right? You're looking for an extension target. You're looking for a target up here. Our ATR was 33, if I remember correctly. Let me just double check that, because again, this is something I did measure out. I think it was 35 at the time. So you take the low of this candle right here. We're measuring out our stop loss now, which is 159.33. And the stop loss is going to be right underneath that one, if you're doing a 1 ATR stop, right underneath that 159 even handle. So let's call it 159 or 158.97. So that's where I wanted mine. So if you're looking for this extension, right, would you guys agree that this is a decent risk reward? Yay? Nay? Yep. However, if you are not a trend continuation trader, right, and you're just looking for a move to retest our previous level of structure up here, let's just take the highest close, and you look at this, is that a good risk reward? No, right? No, not even 1-to-1, below 1-to-1, right? So that is one of the, and so for you guys that are new, I'm a counter trend trader by nature. Meaning I don't look for, in general, I don't look for extensions and to ride the trend until it ends. I look for short, quick moves to get in and out. However, over my career, I did add a trend continuation way to trade, but I made sure it doesn't conflict with the counter trend nature, which is always my number one. So when I take opportunities like this, my initial targets have to come off at a retest of the highs. And then my secondary targets can be for the extension. So not saying that this is bad, right? I chose this way to trade is the way that I like trading because, again, counter trend is my first love. But what it does is it limits me in opportunities like this. So when we have opportunities that have these brief retracements only to like a 3D2 or so, it's very hard for me to get involved in these opportunities because if we don't have a deep retracement, it's just not going to give me the risk reward that I require. So again, that's, we had a conversation yesterday in our Monday Q&A session about the pros and the cons, the gives and the take. These are just things you have to understand when deciding which type of strategy or what type of trader that you want to be. So thought that was cool. And who knows, we may get a complex pullback. We may get something that does this, boop, boop, and then that's going to offer a much different opportunity down there. So you never know. So we'll keep an eye on this. If you are someone who is just looking for a return to the highs here, like me, because I'm not a true trend continuation trader, you weren't able to get a good risk reward and you had to wait for a secondary opportunity. Well, as price came down, we got our secondary opportunity, and I can show you what the idea initially looked like, right? So the entry for me initially looked like this. This was my initial thought. Long here, we came down, we put in a couple dojis, 2 inside bars here, right? And initially the stop loss was gonna be down, I think 57.85s, if I remember correctly, somewhere around this area, 85, 87s, with the target potential, right, going to this level right here, right? Looking at the highest closes of this structure level. And you guys can agree, looks like a pretty decent risk reward. Yay, nay? Yay, nay? What do you say? It's more than 1-to-1, right? That's my minimum requirement is 1-to-1 aside from the cipher pattern. So yeah, it gets the job done. However, when I brought in some volume, and we talked about volume being a tool that can help you adjust and adapt targets, where did the spike of volume occur? Is it at my target level or is it prior to my initial target level? Before, right? So this caused me to adjust my targets down to this level right in here. And unfortunately, you can see what it does to my risk reward. So Euro Canada was a good example of we used volume and it allowed us to adjust our targets by I think about 50 pips and give us a lot more opportunity. This was an example of how that extra indicator clue of volume actually caused me to reduce my target potential, which meant it turned a trading opportunity into a non-trading opportunity. Now, in hindsight, you look at this and you're like, bad volume, bad, because if you would have, it didn't hit targets, but price action did what you thought it was going to do, and especially if it goes up to hit that initial target area, you're thinking that, man, this thing ruined my trade and it's evil and I'll never use it again. But should our trading numbers and our feelings associated with those numbers, should that be based off of a single trade? At the end of the day, does this one single trade make any type of difference? Not really. It's one trade in a sample size. It is one example of a trade where this indicator, I don't want to say hurt me because I didn't get into trade, so it didn't hurt me, but it hurt my potential opportunity. But if we're thinking about 100 trades, right? Just to give you a nice round number, right? 100 trades in a sample size. And there may be 5 that hurt you, right? That hurt your opportunity and you would be more profitable if you ignored that indicator. But what if there are 10 that helped you? 10 that gave you more profit, right? This is why we need to think about bigger picture, right? We can't get caught up over the single trade and the fact that this single trade stopped us from the thing and then we get angry and then we ignore it on the next trade, right? If we've done our testing the right way and if we've decided that this indicator is going to be helpful, we haven't just decided because we're like, oh, it looks cool. We've decided because of the numbers. And if you go through, and I always encourage traders when they have questions about their trading strategy, go back through your back testing because I guarantee you're going to find results. Meaning that you're going to find opportunities in your back testing where whatever filter you added had a negative effect. But at the end of the day, you decided to trade it live because bigger picture over hundreds and hundreds of trades, said filter ultimately had a net positive effect. But we don't see that until we get to the bigger picture. So I thought this was a cool example of this because it was frustrating. It's like, I always hate when I make a good prediction and I'm not able to get involved. And again, this didn't hit target, so it can turn around right now. And then I can be like, whew, glad I didn't get involved. So you never know, but it's a good example of not getting too emotional and not making a change off of a single trading opportunity. Ultimately, this single trading opportunity doesn't mean anything in the bigger scheme. And what's interesting is that you have a situation like Euro Canada where it helped you massively, right? And literally helped you. It made you more profit. You have a situation like this where it hurt you, but it didn't really hurt you. It hurt you as far as potential profit, but I don't really count potential profit as being hurt. And we always weigh the negative more than the positive. So we will harp on this and be like, oh, stupid dollar yen, stupid dollar yen, stupid dollar yen. I couldn't get involved. It didn't give me this. But we just had a trade that it helped us massively. But all of a sudden we forget about that because the good trades are supposed to happen and the bad trades stick with us. The same thing like how as human beings, it takes a whole bunch of positives. I forgot the number, but it takes 7 positives to offset 1 negative just because we value the negative that much more. It's the old caveman brain of threats and running from, wild wildebeest or saber-toothed tigers and all that fun stuff. So yeah, this is also, Scott says, following your rules. Cool. This is also why if you want to offset kind of the mental side of this, not only are you tracking your normal data points in your journal, but you're grading yourself off of good trade and bad trade. So for me, it never feels good to put a loss in your journal. I mean, at this point, I don't care because I'm completely numb to anything. But it does, I would much rather put a win in than have a red number pop up, right? But after I do my data and all my trade stuff and win, loss, P&L percentage, gain, loss, whatever like that, the next category I have is my trade grade. And that just makes me feel better. Because the majority of the time, 99% of the time, I still make mistakes, right? But 99% of the time, I'm going to get a grade A on that trade. And I always like having that as the last thing because at least I can say, okay, I end with a positive instead of ending with a negative, and then mentally that helps me for the next trade. So thought it was a cool example. Just diving back down a little bit more into dollar yen because we are at that high volume level. Hope you enjoyed the video. I know a lot of you guys have a lot of questions about trading. There are tons of videos here on the YouTube channel that answer those for you, but I have even more content on my podcast. So if you ever have a specific question or a specific subject that you want to hear about, Google search Akil Stokes and enter subject, or Trading Coach Podcast and enter subject, and you'll probably find me discussing that topic. If not, then always reach out to me and I'll create a video for you. All right, until next time, plan and trade your plan. Take care.